the most trusted business news brand, 23 years and counting.
Economics,
It gives a pulse check on the markets.
pharmaceuticals and healthcare,
Autos,
Steel and cement.
Grow your portfolio.
commodities,
FMCG is life.
technology and telecom,
startups,
Geopolitics that impacts your life.
green economy,
Banking,
mergers and acquisitions and deals,
decoding law and courtroom action.
Finer details about the mega trade pact.
retail,
politics,
insurance,
all about mutual funds, monetary policy.
Dealing room.
Well, hello and welcome to a fresh new edition of Bazaar Morning Call. It's a very special day for all of us here. It's CNBC-TV18's 23rd birthday. I'm Prashant Nair. With me, my colleague Sonia in the studios. And of course, Nigel is joining us from a different location. 23 years. I think, that really kind of summarizes why viewers tune into CNBC-TV18 every day. It's an absolute pleasure and privilege to get to you viewers information day after day. Sonia, hi.
Absolutely. Happy birthday, CNBC TV18. Happy birthday to all of us, to our viewers, to our followers. And, on the top band, you can see when we started off, right? The sensex was at 4,500 and the nifty was at 1,800.
Yeah.
Way back 23 years ago. And what a long way we've come. The equity cult has come a long way, and so has our channel. So it's celebrations galore today. And I think we're missing Nigel here in the studio. I think he's off to party. And where is he at? There, right there at the exchanges. Nigel, it's party time.
Well, that's right. It's party time, and we want to thank all our viewers, first of all, for supporting us over all these years. Your feedback is very, very valuable, and your support has been valuable. But since it's a big party, we had to make it a little bit more special, right? So we're coming to you live from the National Stock Exchange here in Mumbai, the headquarters, and we'll be getting you the top market voices, the top market opinion, all through the day. So you stay tuned to us, and later on in the day, we'll get you another surprise as well. So, guys, I'm coming live from the National Stock Exchange. I don't think it gets bigger than this, right? So let's get the party started.
Surprise, I hear. So I hope it's cake. It's something sweet because it's 23 years, right? I mean, it's not a small time. So
A 23 kilo cake, Sonia, is this?
23 kilo cake is something. At least I'm expecting that. Nigel, what about you?
Well, it's going to be a special one. I'll tell you what, guys, it's the big party, right? I'm not coming back to office, but I'll be joining in all through the day from different locations. So let's see how that goes. And if there is some cake, Prashant, you've been talking about it from yesterday, please let me know. Then I'll definitely visit the office and, knock in the cake, the drinks, whatever you want to do. But I'm telling you, I'm in party mood today.
Nigel, Nigel is going to be at the NSE, then he's going to be at the BSE. So just tell me where you're going to be at, Nigel. So we'll get the cake delivered, cake and drinks delivered right there. Nigel is going to be there. Our colleague Shireen, of course, the managing editor, is going to be there at the NSE. There will be Nimesh, who will join us from the NSE as well. And of course, as Nigel pointed out, all of the top minds from corporate India, from the world of markets are going to be joining us from the NSE, the premier exchange in the country. Let's just quickly, for our viewers, sort of get on with the business of day-to-day tracking markets. So how are things looking this morning? You've got the US markets, which sold off once again. So for the fourth straight day, US markets are down. This is looking a little worrisome because the S&P has been down 7 days out of the last 8 trading sessions. And people are starting to ask the question whether, this grinding higher kind of market that we were seeing in the US, that is finally starting to come to a bit of a halt. I was talking about WIX, which, by the way, the CBOE WIX, which hit 19-ish levels last Friday, and how around there it starts to bottom and starts to bounce. The CBOE WIX is up 17% since last Friday. The big positive for India is oil prices, which is down 9% over the last 3 sessions, right? The problem is it's not showing through. It's not showing through, especially in the currency. And we were talking about this in the last 30 minutes, last 45 minutes of trade. The rupee has lost almost 150 paise in the last 3 trading sessions, right? Now, this is worrisome. Oil's coming off. It's the single biggest important macro variable, and oil, and you've got the rupee, which is under pressure. I mean, it's not as if the dollar has seen a blowout move or anything of that sort, so we'll have to keep track of that. We'll pose that question to experts later on. And of course, there is the RBI today. The big question is, will we see a change in stance? I mean, a hike, it's perhaps 25 or 35, but will we see a change of stance in terms of what they do with liquidity? Supports we've been highlighting come in for the Nifty at about the 20-day moving average. By the way, the 20-day has also moved up a little bit. It now stands at about 18,439. And if you are going to test higher levels, I mean, the level to take out is 18,887, which was last Friday's high, the recent high, swing high, so as to speak. So that's the quick setup. Sonia, what are you watching?
So I know it's party time here at CNBC-TV18, right? 23 years is what we've completed. But for the market, doesn't look like it's going to be a party time for the bulls. I mean, let's be honest, there are weak global cues and the market is definitely going to react to that. The SGX Nifty for now is indicating a cut of about 40-odd points. And remember, for our own markets as well, right? The Nifty ended in the red for the third consecutive day yesterday. And we've seen both foreign and domestic investors sell a bit in the cash market. So there is some, resistance at higher levels, if you'd want to call it that. There was 600 crores gone from FIs, 550 crores gone from DIIs. And yesterday is the RBI policy. There is a moderation in rate hikes. So after 50 basis points for so many rate movements, this time it's expected to moderate to 35 basis points. But it's important to see what the stance of the RBI is. Inflation has come off a bit, but what's the stance on growth and inflation is something that I'll watch for very keenly. There's the US Fed meet as well. That's on the 14th of December. So that's the next big thing that the street will watch. Now, there are a couple of levels, right? I mean, there's, of course, a 20-day moving average that all of us are looking at, 18,430. Does that hold? There's a range seen between 18,400 and 18,800. So that's something perhaps that you'd have to work with. There are a lot of global cues, Prashant, and there is a bit of trepidation as far as the global banks are concerned too. So that could maybe keep a lid on the markets, at least in the near term.
I mean, you've got all these top global bank CEOs, right? I mean, one after the other. JP Morgan, we've got Jamie Dimon, of course, has been saying this for a while now, that, I mean, a storm is coming, strong wind is coming. You've got Bank of America, Morgan Stanley, Citi, all of them, and the graphics will come up on your screen. CEOs of all these banks are warning about some sort of a slowdown in 2023. It's nothing new, but it's something to be cognizant of. At the margin, I'd just like to leave you with this thought. I've seen this before in 2008. I've seen this in 2013, 2018. Banks are a big sort of part of the entire financial sort of sector in the US. I mean, the biggest. And they have an oversized influence on policy as well. So when bank CEOs start to say, well, a recession is coming, a slowdown is coming, policymakers sit up and take note, right? Some of them have also been saying that perhaps at the margin, enough has been done in terms of tightening, etc. So is this kind of a veiled message to policymakers? It could be that maybe enough has been done and don't tighten too much. But in any case, these are comments from top global bank CEOs, so we have to take note of them at this point in time. Nigel, what are you watching from the futures and options space?
Well, yesterday we, as you were mentioning, the institutions, they sold 1,100 crores and we entered down a paltry 50-60 points, which is par for the course. Now, buy on dips, that played out yesterday, and I think that's likely to be the trend as well. In terms of the mid-cap action, yesterday the mid-caps, they fell as much as the Nifty. But the small-cap index, that was a relative outperformer. And for me, that's encouraging. And I'll continue to track the breadth of the market because that's what makes portfolios feel good. Now, why did we fall then? Why did we end lower in trade yesterday? One was the institutions sold. The second factor is there was unwinding of positions, both on the Nifty open interest as well as the Nifty bank open interest. There was some shedding in terms of open interest. So that explains why, unwinding of long positions did take place. And the FI data perfectly ties in with that. The FIs, they reduced their long exposure and they added their short exposure. And we were asking for some shorts in the system. Well, it seems that that wish is coming through, at least from the bullish perspective, actually. Because if these shorts don't get follow through, we'll see a bit of a short covering bounce. And just take a look at the change. From the start of the series, the short positioning was only around 23%. That's moved to around 38% odd. So far more shorts in the system, which is not such a bad thing. On the option side, well, the only worry is the call writing continues. And the recent highs will be a bit of a resistance level. So yesterday as well, we did see, a fair bit of writing in trade, and the FIs, they've been writing calls. But the 18,600 put in a falling market was very active. The signs are that there is writing at that level. So the 20 DMA becomes crucial. You need to stay long on the index till the 20 DMA on the Nifty Bank. The level comes up for you on the screen. That's around 500 points away from current levels. And on the Nifty level as well, the 20 DMA is important, but I think the 18,500, 18,550, I'm expecting a bit of a fight at these levels. SGX50 suggesting a flattish to a mildly negative start. So buy the dip, maybe closer to around yesterday's low, a little below that, 18,550, the crucial level. And we'll hear from the RBI governor, and let's see how things move from there. Back to you guys.
Oh, absolutely. The RBI governor today, you have the US Fed meeting on the 14th of December. There's a 50 basis points rate hike expected there. So lots of central bank action as well is what the market can look forward to. But let's kickstart the show. In about 1.5 hours from now, you'll have the RBI monetary policy. So more on that in a bit. But in the meantime, on the equities front, our first opinion of the day coming in from Vikas Jain of CLSA, who says that 2023 may see an impact on growth due to aggressive tightening action taken by the Fed and the possible strength in the Chinese economy after it opens up, even as the market seems to be sanguine of a soft landing. He says an extended absolute and relative valuation of India, along with a recent jump in investor sentiment to an extended 90% bullish level, is possibly warning us of a low to negative return in 2023 and a likely migration into debt from equity both in India and globally. He says the election cycle playbook suggests a top in January, followed by a double-digit pullback in the Nifty as the government possibly gets more focused on key elections.
Well, some money market views as well. This is Kunal Sodani of Shinhan Bank, who says headlines surrounding global economic growth. Russia portray a contrast with China's COVID-linked optimism. He says Brent crude prices are at yearly lows. He adds it is also important to note that the lower forward premium in the dollar INR makes carry trade unfavorable. He says exporters thus remain less enticed to hedge, thus reducing the supply of dollar in the forward market, which in turn also suggests dollar cash crunch in the market, pushing the pair higher. He says all eyes today are on the RBI policy for the USD INR pair. He expects 82.2 to a dollar to act as a support, while 82.8 as a resistance.
Okay, it's important because there was a big crash in the rupee yesterday, 82.60, right? It's almost a 1-month low. On the bonds, here's what you can expect. Neeraj Gambhir of Axis Bank says the market finally broke the resistance of 7.25% on the 10-year and traded up to 7.18% before retracing some of the move on a weaker auction. For the rest of the week, he says the market will take direction from the RBI MPC and he expects a base case of 35 basis points rate hike. He expects the 10-year benchmark bond yield to trade in a range of 7.15 to 7.3% in case there are no surprises from the RBI. All right, well, that's the views coming in. We have a lot of stock-specific action to track today, so we'll get to that with our entire research team in just a bit. We're looking at HDFC AMC, Siemens, ICICI Lombard, Star Health Insurance, BKG Foods, 5paisa, Ircon International and Craftsman Auto. That's on the radar on the back of positive news flow, and the Sapphire Foods and ONGC that's likely to open in the red.
All right, Rupal Bansali is joining us now. She is Chief Investment Officer, International and Global Equities at Ariel Investments. Rupal, it's always a pleasure to have you on the channel. Great to have you on the program. Appreciate your time. Prashant this side. Rupal, you know, we've had a very decent bounce in both the US, but more so here in India. How is the global environment looking as we are entering the last lap of 2022 as we enter 2023 now?
Well, thank you for having me. And first of all, congratulations on 23 years of excellent reporting on market news. It's really a great and thing to celebrate. So thanks for having me on today. In terms of the global market, I think that there's a bit of a distraction in terms of the Fed dot plot. Everybody's focused on rate change. I would argue people should focus on regime change, which is not just how much the Fed is going to raise rates and where inflation is going to peak, which of course is important. But I think the larger challenge for the markets, the US in particular, but that's going to spread internationally, is this regime change from quantitative easing to quantitative tightening. The implication of that is that risk assets get repriced across the spectrum, and equities are a risk asset. And so I'm expecting a very challenging year for US equities in particular. And because the US accounts for 62% of the global benchmark, it tends to drive and exert a gravitational pull on all markets around the world. And from that standpoint, I'm quite bearish.
Okay, quite bearish, and it's a challenging year for US equities. Rupal, good morning, and thank you for your lovely wishes. I had a chance to, go through your book, Non-Consensus Investing, and I must say it's a fabulous piece, so congratulations on that. You have had almost 25 years of experience, and you've tried to sort of, consolidate that in the book. But just tell us from an investor standpoint, an Indian investor standpoint who's watching you right now, amidst all of this talk of perhaps a global recession, India has been very resilient and, continues to hit new highs. Do you think that could be the trajectory over the next, year as well?
So I'm very bullish on India long term, but I think in the very short term, there are some headwinds that India has to reckon with. In particular, the inflation problem in the world has become an inflation problem for India, and especially for foreign investors, because the current account deficit, due to the high import bill, hurts the currency disproportionately. And so I think that's going to be a headwind. The other headwind is that, corporate capital expenditures and infrastructure spending by the government has been quite elevated for the last couple of years, and that's underpinned GDP growth in India, which is why it's sort of decoupled and the markets performed very well. But I think it's going to be very hard for that to sustain in the very short term. Now, but in the medium to long term, I think there are some secular forces that are actually very bullish for India. Deglobalization, which is a big source of risk for many markets around the world, is actually a source of an opportunity for India if it chooses to seize it. And I think the government is looking to seize it, and I hope that entrepreneurs look to seize it, because there's going to be a great deal of relocation of manufacturing capacity and outsourcing away from single countries like China, and I think India is going to be the beneficiary. Now, the logistics reform package, an initiative that the government has announced, I think is a very key part of it. But I think to a certain extent, labor market reform will also be required to allow people to have confidence to invest in factories at scale with hundreds of thousands of workers like you have it in China. But I think medium to long term, India can be a huge beneficiary of these secular trends. Short term, I'm afraid I don't have the same message. But I think most investors should be long term, so there's good news from that standpoint.
Well, that's right. Rupal, we have an equity cult that's developing here in India, and that would be music to their ears, and the longer term India is standing out. But Rupal, I wanted to ask you, earlier this year, in the middle of 2022, we saw global equity markets see a correction, and we bounced off those levels. Now, the fear is 2023 is not going to be such a great year. Do you think we revisit those lows at some point of time?
Yes, I have a very strong view on this because I research companies and stock markets for a living, about 50 countries all over the world, and clearly the US is a very big piece of that puzzle. And I will tell you that, from every vector, whether it's growth rates, whether it is corporate profit margins, whether it's tax rates, whether it's reinvestment programs, on every level, the corporate sector is going to be quite challenged. And remember one thing. If real estate is about location, equity markets are about earnings. And earnings, consensus earnings expectation for 2023 in the US market certainly are very high and need to come down. So I think all of that, and when earnings come down, multiples tend to come down. Just as a reminder, when there was the tech wreck, the bubble burst in 2000 to 2002, the NASDAQ corrected 78% over that 3-year period. However, on its way down 78%, it had 20% plus bear market rallies. So I think the most recent rally that we've seen, especially in this quarter in November, is one of those head fake rallies where the market seems to be a bit of on a sugar high, thinking that the Fed is going to at least slow down and not be so aggressive. I think that's a premature verdict. And as I mentioned, it's not about the rate change, it's about the regime change, which is going to be with us for a multi-year, if not almost a decade-long period.
But why should there be a regime change, Rupal? I mean, what's the core reason for that? Why won't they flip back to the earlier era of lower interest rates and keeping everything on an even keel, so as to speak?
The Fed is very clear. They're going from quantitative easing to quantitative tightening. That's the regime change I'm talking about, which is a withdrawal of money, monetary stimulus.
Sorry, apologies. Once they achieve interest rates to near about where they want them to be, why wouldn't they start easing by the end of 23 again? That's my question.
Oh, I'm sorry. So I think the reason I'm calling it a premature verdict that they would start easing again is because in the history of inflation coming under control, you've never had it come under control till real rates, i.e. the normal interest rate is at least a couple of hundred basis points above inflation. And nobody is predicting inflation to go below 4% next year, not even the Fed. It's a journey on the way to 2%. And I think that that's going to be an extremely hard hurdle to reach, given the labor shortages that the US market is facing. So this is an expectation. It is a hope. I don't think it will translate into a reality that the Fed actually will have the wherewithal because inflation is unlikely to come under control that quickly.
Okay. Just one final question. Since you are bullish on India for the longer term, if someone is trying to sort of, build a portfolio for the new year, the best strategy in the last 1 year has been to go long on banks and short on IT in the Indian markets. What do you think the strategy should be in 2023?
I think a bird in hand is worth more than two in the bush. Whenever you have capital depreciation instead of appreciation in the markets, dividends tend to play a far bigger role in generating total returns. So across the spectrum, dividend yielding companies, especially the ones that have an above average dividend yield, which can sustain themselves on a low payout ratio. So again, I'm not talking about a head fake high dividend yield, but something that's good enough and yet will give you growth over time as well in terms of dividends, is generally proved the best strategy all over the world whenever markets are facing pressure. History has shown that.
Okay, so stick with high dividend yielding stocks amidst all this uncertainty. Rupal, always a pleasure speaking with you. Thanks a lot for joining in and being a part of CNBC-TV18 celebrations. It's our 23rd birthday today, so it's a special day for all of us here on the channel. Thanks a lot for tuning in.
Thanks for having me. Bye-bye.
Okay, that is Rupal Bhansali talking about the possibility of a recession coming through globally. But for India, she likes the Indian markets long term. But like we've been telling you, it is celebration time here on the channel. We turned 23 today and we have lots planned for you. We're coming to you live from the National Stock Exchange this morning and then from the Bombay Stock Exchange for the end of the trading session. So you'd want to stay tuned in for that. We also have lined up for you the best and biggest voices through the course of the day. To talk markets and investing, we'll be joined by Ashish Kumar Chauhan, Nilesh Shah, Navneet Munot, Madhu Kela, Sunil Singhania, Shankar Sharma, Sameer Arora, Amish Vora, Atul Mehra and Rajesh Palvia.
Well, India Inc. will also join in the celebrations. We have the SBI Chairman, Dinesh Kumar Khara, joining in, SBI Managing Director, C.S. Sethi, HDFC's Keki Mistry, JSW Steel's Seshagiri Rao, Axis Bank's Amitabh Chaudhary and Lupin's S. Ramesh. We will also bring you the biggest FII voices here on CNBC TV18. So stay tuned all through the day to catch this power-packed lineup all day today.
Welcome back. You're tuned into Bazaar Morning Call. You're on CNBC TV18. It's our special day because it's our 23rd birthday. But we need to track some stocks for you, and our entire research team is joining in. So first up, though, let's address one of the top stocks that will be in focus. HDFC AMC. Nimesh joins us. Well, Nimesh, I'm going to be practically the most informed person today because Nimesh and me are going to be on the road. But tell us, you're tracking HDFC AMC. A large trade is what you're watching out for.
Yes, Nigel. So it's in a big surprise move last evening. Aberdeen Asset Management, who is the co-sponsor of HDFC AMC, has gone ahead and said that they want to sell their entire 10.2% stake in HDFC AMC. They will cease to be the co-sponsor of HDFC AMC going forward. But interestingly, out of that 10.2%, they're willing to sell 9.9% stake to just a single buyer. That's going to be very important because, that will remove the overall, supply overhang of HDFC AMC. Remember that HDFC AMC has been a rank underperformer in the last 1 year, and there has been this concern about everything selling stakes. So now they've gone ahead and said that they want to sell to a single buyer. That will be very important. In fact, Jefferies put out a note today morning and they said they will require the unit holder approval as well if there is no exemption. So that is something to watch out for. But what I understand from sources that one single buyer is likely to be a large private equity player. So very important deal, and HDFC AMC will be in the green, I believe, because the concern of a big supply overhang will be out of the way.
All right. So while they're selling, I think that last point is important to note. Nimish, thanks for that. Overhang with this stake sale perhaps out of the way once this is done, that is. Now, Siemens is the next one in focus. They've emerged as the lowest bidder for a large project. Vahishta is here with details. Vahishta, hi.
Hi, Prashant. Good morning. For Siemens, as you rightly mentioned, it has emerged as the lowest bidder for the 9,000 horsepower electric locomotives project in Dahod, which is in Gujarat. Macquarie says that the order would be substantially higher than the current order backlog. As on 30th of September 2022, the order backlog was at 17,100 crores. Macquarie expects a robust order inflow for the mobility segment to continue in FY23 and factors in a 23% CAGR order inflow for the mobility segment over FY21 to FY25. Macquarie has an outperform rating on the stock with a target price of 3,120 rupees. Back to you.
Okay, that's a big upside to the current market price. 3120 is the target that Macquarie has. Thanks a lot for that. Let's go across to Surbhi now. She's tracking some of the insurance companies this morning. Surbhi, what's the news there?
Hi, thanks for that. The general insurance data for the month of November was out last evening and the industry saw a strong premium growth. For ICICI Lombard, the November premium was up 19% on a year-on-year basis and year-to-date it grew by 22%. On market share front also, it gained 40 basis points this month. Standalone health insurance also saw a strong growth of 34%, of which Star Health Insurance grew by 16% on a year-on-year basis, and year-to-date it grew by 12%. The market share was marginally down close to 18 basis points for the month, but overall good numbers from general insurance companies.
Stocks will react today. Thanks very much, Surbhi, for that. BKG, the recently listed snacks player, reported numbers for the second quarter. Sonal is here with details. Sonal, hi.
Good morning, Prashant. Well, good set of numbers by BKG in the second quarter. Revenue growth of 31.5% on a YOY basis, leading to an EBITDA growth of 40%. There was a margin expansion as well to the tune of 100 basis points, coming in at 11.4%, leading to a profit growth of 43%. Now, remember, the stock listed at a premium, and since its listing also, it's up 25%. And at these levels, it trades around 77 times one-year forward earnings. So not cheap at all. And looks like these results have been priced in as well. But the price action today is something we'll be watching out for. Going with green on BKG today.
Okay, BKG, in fact, that stock, I mean, it's up almost 30% since listing. And as Sonal was telling us, very expensive now, almost 78 times. So I guess that pricing in a lot of the good news. But let's go across to Vivek. He's talking about Craftsman Auto and Sapphire Foods. Vivek, what's the latest there?
Well, good morning. It's actually been a clean-out trade as far as Craftsman Auto is concerned. So, a fund by the name of Marina Singapore Pte Limited actually sold its entire 11.56 lakh shares in the company, which came to around 5.5% stake in the company. Now, very interestingly, the buyers have been marquee names. So, White Oak Capital Management picked up almost 1.28 lakh shares. Abu Dhabi Investment Authority picked up 2.4 lakh shares, and India Aecon bought almost 3.33 lakh shares. So expect some green on this particular stock in today's trading session. On the other hand, Sapphire Foods, we are going with the red in this particular name. What's actually happened over there is the fact that Fennel Private Limited, that held almost a significant stake of 2.77% in the company, has pared a bit of its stake, has sold 6.01 lakh shares in the company, and given the fact that there exists an overhang of further stake sale, we are going with the red on this particular name. All
right, Vivek, thank you very much for that. So lots of deals, lots of blocks happening, have been happening for the last many months now, and these are the latest. Now, more stocks with news flow. Surbhi is here with the list. Surbhi, hi.
So for 5paisa, the board has approved the merger with IIFL Securities online retail trading business. The online business revenue for the month for FY22 was approximately 52 crores. Now this scheme is subject to many regulatory approvals, but if it goes through, for every 1 share of 5paisa capital, you will receive 50 shares of IIFL Securities. Next is IRCON, where the company has received an end-to-end order, that is from procurement to certifying from Sri Lanka Railways. The order is worth 122 crores and the contract period is nearly 24 months.
Okay, thanks a lot for that, Surbhi. Well, the other big headline is what's happened in the world of crude, where Brent is now below $80 a barrel because demand concerns rise. Manisha Gupta, in fact, is here with us. She's our commodities editor to give us more on that. Manisha, morning.
Morning, Sonia. Well, yes, the crude prices now are at an 11-month low. So basically, before the Ukraine and Russia war started, and we have seen 4% of a decline in the overnight market, now taking the crude oil prices to the lowest since December 2021. There has been weak economic data from Europe that the markets have been dealing with. And China, well, that demand was in focus. But then if you look at the service sector activity in China, that has hit a 6-month low as well. So there's going to be some time before the Chinese actual demand starts coming into the market. And then all the events clearly have been non-events. OPEC and allies decided not to further cut output. Near no impact is what we are witnessing of the Russian price cap or the European Union embargo, and that also leads to the premium coming off the prices. Not just crude, you have U.S. natural gas prices trading at a 5-month lows, heating oil prices trading at a 6-month lows. So everything to do with energy clearly trading on the weaker side.
Okay, thanks a lot, Manisha, for that. Well, let's do a quick recap in case you missed out on any of the stocks. Stocks with positive news flow. There's HDFC AMC, there's Siemens, ICICI Lombard, Star Health Insurance, BKG Foods, 5 Paisa, Ircon International and Craftsman Auto. While stocks with negative news flow today, there's Sapphire Foods as well as ONGC.
Okay, in a couple of hours from now, we essentially will be with the RBI, the decision and, of course, the commentary from the governor. My colleague Lata is here with a take on what to expect, what the markets will really watch out for from this policy today. Lata, hi.
Well, I would go with the 35 basis hike now. I mean, the scare we got on the rupee overnight, 2 consecutive days of sharp falls indicates that the RBI cannot ignore the current account deficit. Good growth on our part is leading to high import consumption, and poor global growth means lower exports. So we just have to bring down our consumption, and that will not be lost on the Reserve Bank, I would assume. Stance change is where everyone's looking for data, looking for, some tweak. The chances are they may add something like, we will be data driven. But I just want to point out to all of you 2 sentences in the 30th September statement. Let us all just watch these 2 statements, and I think we will know whether the Reserve Bank is tweaking. One sentence is, the MPC is of the view that further calibrated action is needed to keep inflation anchored. Do they persist with that statement? The MPC has decided to remain focused on withdrawal of accommodation to ensure inflation remains under target. Again, do they continue with that, or are they diluting this sentence? That really will be what the market will watch out for.
All right, Lata, thanks a lot for that. We won't have to wait too long, right? I mean, just about 1.5 hours, and we'll get more from the RBI governor. And looking forward to hear your commentary as well post the RBI policy. Thanks, Lata, for joining in. But back to some stock-specific action. Rima is tracking Vodafone Idea this morning. Rima, over to you.
Thanks so much for that. So yesterday, Vodafone Idea intimated to the exchange that its proposal to issue 1,600 crore worth of optionally convertible debentures called OCD to a tower company, which is a vendor of Vodafone Idea, American Tower Company, has lapsed. The reason is because these issuance of OCD to ATC, that's American Tower Company, should have happened within 15 days of the shareholder resolution. But the issuance could not happen within that validity period is because that was dependent on the government approval coming for the conversion of the AGR interest into equity. Remember, this has been long pending, and the issuance of OCDs from Vodafone Idea to ATC was contingent on this government approval. The government approval did not come through, which is why that validity period of the shareholder resolution lapsed, which is why Vodafone Idea could not issue that 1,600 crore of OCD to American Tower Company. Vodafone Idea has also said that it is in discussion with American Tower Company for an extension of the agreement, and then they will seek a fresh shareholder approval as well. But it's not just this, right? For Vodafone Idea, as I said, the government equity conversion has been pending since January of this year. We're going to be closing in on a year very soon. Earlier reports had suggested that the FinMin approval had come through, but the DOT approval had not come through. Very recently, 2 days back, the Vodafone PLC, the global head, Nick Reed, stepped down. 20 years he's been in the company, and the reason cited appears to be poor performance because the stock price has taken a tumble. The interest burden continues to mount. The interest burden as of 30th September, if you annualize it, is 93% of the company's market capitalization. The debt is more than 2.2 lakh crore. They continue to lose subscribers. In the first half of the year, as per the TREI data, they've lost more than 1 crore subscriber, and this company is yet to announce its 5G plans, while peers like Bharti as well as Jio have started rolling out 5G. Back to you.
All right, we'll take a quick break here, Rima. Thank you very much. Very comprehensive. We'll keep an eye out on Vodafone as well as markets open. On the other side of this break, Deven Choksi of KR Choksi will be joining us with a fundamental stock check. Lots of stocks to throw Deven's way. So that conversation coming up in just a bit. Okay, welcome back. You're with us here on Bazaar Morning Call. SGX Nifty will come up on your screen. Let's just take a quick look at what the indication is. Just a 20-point flat kind of start is what the SGX is indicating of right now. Deven Choksi is joining us right now of KR Choksi. Deven, good morning. Great to have you with us here. Thank you very much for your time. It's a special day for us, 23rd birthday at CNBC-TV18. So let me thank you for being a consistent and steady partner with us. Thank you very much, Deven.
Thank you, Prashant, and it is feeling so great to be part of, I think, this entire journey from the day one. I think your 23rd birthday means a lot to every viewer in this country. So all the best to you, and God bless, I think, for continued success in this journey.
Thanks very much, Deven. Thank you. Just to talk about markets, Deven, I mean, I think if there was one theme from yesterday's session, it was the fact that global facing sectors all sold off, right? Metals were down sharply, IT was down, and you also had the pharma space, which was down quite a bit. Let's just begin with that, and whether you can piece together a sort of common thread through all of that. How are you seeing near term?
So, Prashant, my understanding is that I think not necessary that the fundamentals of all these sectors have changed overnight. I guess I think they are pretty much same as they were before. Maybe I think the market technicals are taking wild swings at every news items which keeps coming in and happening around. At this point of time, I don't see, I think, any fundamental reason for metal stocks to go down per se. Maybe on the contrary, with the kind of a lower crude oil prices and the steady metal prices in the world market, I would think that I think they would be pretty much in a happier situation to maintain the delta going forward. Yes, I think one possibility you cannot rule out, and that possibility is whenever there is a sharp fall into the finished product prices, I think you have a possibility of, I think, providing for some kind of a mark-to-market losses in the balance sheet when you are a manufacturer. So that is where I think probably, I think the markets are reacting. But I don't see, I think, any other reason per se at this point of time for the market, I think, to take negative view on this. Maybe it's a temporary or a short-term view that the market may have taken.
Okay. Deven, good morning. Thank you for your wishes, your birthday wishes. Just wanted to know, have you been with the channel through the course of these 23 years? Because, I mean, I've been here 14 years and I've seen you since the very beginning. How long has it been for you?
So, Sonia, if my memory goes right, I think it probably started with on a day one when probably I think Senthil approached me at that point of time to be part of the channel. So I think it's been a very happy journey, honestly. And what I have observed, I think progressively, the content and the information dissemination which has happened, I think from the channel side has actually enriched most of the users, most of the viewers. And that's where I think the credit goes for this kind of a sustained move that we all have carried out. And I believe that I think you were probably, I think, putting in the best efforts in bringing some of the best information and the quality contents to the viewers. So I think feeling very happy about it at the same time.
Wow. So you've been here 23 years as well. So happy birthday to you too. And, I take your point. I mean, I remember back in the day, from the days of taking printouts and, speaking on air, now to disseminating information on Twitter as soon as it comes out. We've really evolved over time, and that's, I guess, the way to stay relevant, right? But getting back to the markets, what are your thoughts on how one should approach individual stocks now? It's the end of the year. We're beginning a new year. If you had to create a basket of 4 or 5 stocks that one can add in their portfolio now, what would they be?
So I think obviously we see the 23 and 24, 2 years going forward are extremely strong years, I think, as far as India economy is concerned, and so would be some of the larger companies, the bigger companies. More importantly, the growth is coming in from the government infrastructure thrust, and also I think from the PLI initiatives that the government has taken is largely producing the growth for the industry in general. And in that kind of a situation, I think the portfolio will have to include some of the larger companies, the bigger companies, so that at least I think one can get the maximum advantage out of this particular situation of higher demand getting generated. In the portfolio, the inclusion would definitely be of, I think, the companies which are coming from financial segment, particularly corporate banks. I think we remain extremely convinced and bullish about the 20% kind of a growth story continuing for corporate banks. We remain extremely convinced also about the auto space, particularly the commercial vehicle space. With the scrappage policy coming into force, I think it is going to be unfolding a new set of demand for the commercial vehicle. And along with electric vehicles, probably I think the things are likely to change. So auto deserves to be included into it. The technology-led service provider in the IT space would be the third choice, I think, which one would like to add into the portfolio. The likes of Reliance Jio, which is basically, I think, driving more the technology-related play in producing the revenue and the profits. So there could be, I think, one into it. Other than that, I think the capital goods segment providers, I think, are likely to see, I think, larger thrust, largely because also the defense sector has opened up, mining sector has opened up, and also the infrastructure sector has opened up. So they are the ones, I think, who could be possibly part of it. So these are a few thoughts. Maybe I think some of the pharma companies where the specialty generics business is driving the sales and the profits, they could be, I think, selectively added into the portfolio as well, along with some IT companies which are purely into the technology-based solution provider as a service. Platform as a service, I think, that they are providing, there could be also part of this particular inclusion in the portfolio.
All right, fair enough, Devan. Stay with us. There's about 14 minutes to go for the pre-open session. We'll take a quick break here. We'll be joined by Mitesh and Srikanth for some technical trading ideas as well. Stay tuned. Welcome back. You're with us here on Bazaar Morning Call. 10 minutes to go for the pre-open session. SGX indicating a flat start. Let's get you some technical trading ideas, set you up that way. Mitesh is with us, so is Srikanth. Gentlemen, good morning. Great to have both of you here on this special day for all of us. Mitesh, to you first. We saw a bit of a cut, a bit of a pullback yesterday, but we're waking up to cues which are not very positive out of the US. Will the dips continue to be bought, or you'd wait for a little bit longer? I think that's what you were saying all day yesterday. Wait for a bit longer, let prices tell you that we are going to start heading back up again. Go on.
Good morning, Prashant. First of all, congratulations and best wishes on this wonderful journey. On the market side, yes, I think, it looks like a market which has lost momentum at higher levels. Therefore, some consolidation is necessary. This process will also allow, the index to possibly, get closer to the moving averages. The overbought situation will be corrected. So I think this will take a few days. It will be a contracting kind of a market, slightly choppy, but within a range. And therefore, I think, trading with patience or waiting for that dip level to come in to buy is the key over here. We would be more aggressive in buying the index if we get it closer to about 18,500 levels, take a 60-70 point stop from there. And on the upside, I think the recent highs will be the immediate supply pivot, which is around 18,850, 880 zone. So that's the kind of view which I have on the index.
All right. What about you? Srikanth Chauhan is also with us. Srikanth, good morning. You think this market is moving higher anytime soon, or do you see it consolidate in this range of 18,400 to 18,800?
First of all, again, Sonia, I would like to give congratulations to you and to your entire team for completing successfully 23 years in the business world and to keep it a top ranking in the business channels. So if we go through with the markets, then yeah, the markets are going to spend some more time between the range of 18,600 and maybe 18,900. These two major events like credit policy and the result of Gujarat elections will keep the market a little bit volatile. But on the completion of these two events, we need to see that whether the market manages to cross 18,900 or not. While looking at the overall pattern and the way the crude has fallen, we are of the view that market is about to cross the levels of 18,900. We need to be buyer if there is any correction in the market. Somewhere close to 18,600, the market is having excellent support. But in case if we see any drop close to those levels in again today's date, then we should be buyer with a target of again 18,900 to 19,000.
Okay, I don't mean to rush you, but just wanted to quickly get the stock ideas out of the way as well. Srikanth, what's on your list?
Yeah, I would like to go with those stocks which are not parallel to the index. We like Delta Corporation. Yesterday, the stock has formed ascending triangle and it closed above the same. We are of the view that it is heading for at least 250, 255. We should be buyer at current levels with a stop loss around 230. And the other stock which we like is Apollo Hospitals, which is around 4,800. There we are expecting stock to move towards 4,950 or 5,000. We can keep stop loss somewhere close to 4,740.
And what about you, Mitesh?
So I have a mix of buys and sells today. Grasim is a buy with a stop at 1804, targets of 1865 here. And Adani Enterprises is the other one, which is a buy with a stop below 3980 for targets of 4150. On the sell side is Page Industries. Keep a stop just above 47,500. Look for pullbacks, declines to about 46,000 levels. And Bharti Airtel is a sell with a stop at 843 for targets of 814.
All right, gentlemen, thanks very much. We'll keep coming back to you. Srikanth and Mitesh, appreciate your time here. As always, Rajesh Palvi as Vice President, Technical Derivative Research at Axis Securities. He's also with us. Rajesh, hi, good morning. How are things set up from an F&O perspective and what are your trades?
Good morning, Prashant, and I wish to congratulate you on your special day to entire team of CNBC-TV18, and I wish that this great journey keep on continuing to reach new highs. Today market setup looks mixed, again to play this mixed behavior of market, we believe that again 18,500 is very strong support for this weekly expiry. So to play this weekly expiry, we initiate here call ladder strategy. Here we will buy 18,600 call option at 120 rupees and we will sell around 18,700 call option at 65 rupees and 18,800 call option at 20 rupees. So it's a three-leg strategy to minimize the risk. Your net outflow would be around 45 rupees. Your break even for this strategy will be around 18,645. So if at all Nifty expires in range of 18,645 to 18,865, you will be making profit. And looking at the setup, we believe that this pullback should come for expiry point of view, and 18,700, 750 should be the zone where Nifty can expire for this current week. So play this move. We are initiating here call ladder strategy. On stock specific, we believe that M&M Financial is looking very attractive. A strong addition has been seen in last couple of trading sessions. So we advise to buy M&M Financial here also for upside target of 255, 260. One can keep stop loss of 230. Another stock which we like at current juncture, that is from cement space, that is Ambuja Cement. Strong addition has been witnessed on the cement space. So Ambuja Cement can be outperformer. We are expecting target of 610 to 615. Keep stop loss of 575.
Okay, thanks a lot for joining us, Rajesh. Have a great day. So that's Axis Securities. But since it is our 23rd birthday today, we thought of inviting someone who's been with us perhaps through the course of these 23 years. Someone who has been a mentor, a guide, a friend, and has given us perhaps equal amount of bouquets and brickbats through the course of this 23-year journey. Samir Arora, founder and fund manager at Helios Capital, is joining us now. Samir, we have some visuals. I don't know if you can see them, but starting
I'm looking smart.
Oh, you can? Okay, way back in the day. You don't look very different now, I mean, to be honest. Just, I guess, a little more hair, a little plumper, some more weight on your face. Okay, look at that, Asian Tigers. That was way back in the day, right? When I think Udyan was in Singapore with you. So it is as much your birthday, Samir, as it is ours, because
I wish I was 23.
Samir, you're only a little older than 23. So I mean that's also one of the reasons why we decided to invite you. 24, 25, right? But
I was there more or less on the first day, plus minus. I would have been there on your channel.
That's what I said. I mean, stopping short of sitting here with us in the studio, you've been with us through this whole journey, ups and downs. But
too many brickbats, I think. Maybe once in a while.
On Twitter, maybe a little more. But
I call it business channel.
It's all part of the course, yeah. But Samir, I mean, this is a great journey for us, and we've had so many people tell us that, through the ups and downs of the Indian economy, we have sort of come out with views, opinions, facts, and we've been steady through it all. And thank you for being a part of our journey. But what do you feel is sort of, the next couple of years for the market? Will we continue to have this? One thing has been constant, the equity cult has only grown. Do you think that will be the case?
So that, of course, is clearly the case and has been for the last 4 or 5 years. The only thing is we should not take the market performance for granted. Right now, what is happening is that, of course, we are bullish and generally India is doing well relatively and even absolutely. But every day we are ignoring everything else just on the basis that we have this domestic investor base which wants to start, and they have done well and they've held through these sort of bad phase of COVID and after that. But still, I think every day they just take it as if it is a given that in the end of the day, it's going to be up. For example, in the last 2 days, markets are down so much. Or even last month, once in a while, whenever these things have happened, we have become overconfident, I think, which I think is not, I mean, as a market, not as me personally.
That's an important point, Samir, that not to take things for granted, take outperformance for granted. I think we'll come back to that exact same point, but we have to take a quick commercial break, Samir. So stay with us. We'll continue this conversation with Samir. Also come back with the pre-opening rates on the other side.